come to realize that when there is a safety incident, often there are two things that are at play. One might be an unsafe condition or an unsafe workplace or unsafe installation. But in most cases, it's also behavior. So you can have all the systems, all the processes, but people's behavior are often what triggers safety incidents. As a result, we came up with that program, which was in the quiz, which is called Busongo program. So the idea is that we are investing significant amounts of money in our safety program. I think has around 45 million kwacha this year as safety expenditure, and we are doubling that to over 100 million next year. But that's not enough if people are not changing correspondingly their behaviors. So we thought we needed to tackle both so that both elements are addressed. Moving on, I mean, 2026 has been a very challenging year. I think I spoke too soon, I think last year when I spoke about a perfect storm. I want to withdraw that. So if you if you celebrated with me the perfect storm, it was too early. I think we thought with the drought, power issues, and everything else that we dealt with were challenging, but we've found that 2026 has been even more challenging. But I think it's always good to start with the brighter side of things, the green stuff. So I think to start off with things that have gone well, I think the first one is that we received adequate rainfall. I think one of the best rainfall seasons that we've received in a very long time. So that's obviously augurs well for crop growth, which will result in high yields. But it also means that we spend less on irrigation, and also I think not just for the sugar industry but for the country at large, the power sector recovers when we get good rainfall, because over 80% of our power in Zambia comes from hydro sources. So that was good. We've also continued to invest in different parts of our business. We're investing in agriculture, continuing to upgrade our irrigation systems. We are investing in our factory to improve efficiencies, but also to generate more power. We are also investing in our route to consumer to reach more people, but also to be able to respond to all these challenges in the future. I think we've all heard the term that we live in a VUCA world, a world that is volatile, uncertain, complex, and ambiguous. Every morning that you wake up, you don't know what to expect. I think in February we suddenly woke up to a war in Iran, and I think up to that point we had never heard of the word Hormuz, and what it meant when you go to the service station every morning and you are expecting to have some. So the world is volatile. It's uncertain. You don't know what's going to happen tomorrow, and with all these complexities that come out of geopolitical tensions and all these things, and that brings ambiguity with it. So we haven't been spared, but we believe that when you live in a VUCA environment, you can only focus on things that you can control, So the things that we can do something about, you will see that when we go through some of the challenges that we faced, you really don't control those things. But we believe that business is about how you invest and position yourself to neutralize risks, to neutralize threats, as well as to take advantage of opportunities. And I think you will see when I take you through the strategic investments that that's what we are doing. And I think, not surprisingly, the success of any company in being able to deal with all these things is through the agility of your people and leadership resilience. When you think about all these things that have been thrown at us, from droughts to floods to supply chain disruptions and all that kind of stuff, it can be very overwhelming and challenging. But having the resilience to reposition, to figure out, to solve problems and be able to tackle these challenges as they come is really so those are some of the things that we have had on our side to be able to deal with the challenges. So what's happened in the market? What we have seen is a significant drop in domestic demand, and it may not be demand that has dropped. It may be just sales that have dropped, because there's a difference between demand and sales. So what might have happened is that because we are not able to measure everything that's happening in our market, what may actually have been happening is that there's a lot of illegal imported sugar that's coming into the country, and as a result, we are just seeing it through the slowing down of our own sales. So from that perspective, that's what we've experienced. But also, you will have seen that one of the challenges that it's a positive, but in business, a positive depends on where you stand, isn't it? So when inflation comes down, it's a good thing, So we were in double digits numbers, 16%. Now we are down to around 7.1%. It's a good thing overall. But if you are in the sugar industry like us, you grow your crop over 12 months. So what's happened is that we've grown the crop at a time when inflation was high, and those costs are now sunk in the crop. When the inflation comes down, it means you can't increase prices, but I've already incurred the cost. So what we've also seen is that anticipation that people had that with inflation coming down, prices have to follow. And as a result, if you want to buy bulk, you withhold buying, waiting for the prices to come down. So, but then what happens is this process can happen over a month, for example. People are expecting the prices to come down next month. That means this month your sales are slow. And then maybe these processes of reducing prices, as you have seen, they take time. So 1.5 months you've hardly sold at the same rate, and once that opportunity is lost, you then can't recover it. So it's been a significant impact. That illegal imports, they followed the macroeconomic reset that has happened. So let's just unpack that. So what's happened on the macro front? I've already spoken about inflation coming down from a peak of 16%, I think October last year, to now 7.1%. We've also seen the exchange rate appreciating by around 30%, from about 26 to I think it was 25.5 when we did our numbers, to 18.5 plus minus somewhere there. So that's a 30% appreciation in the currency. And again, depending on where you stand, course, we can say what happened to your foreign currency denominated costs, but I've already grown the crop. So I'm not going to benefit from any cost savings that are going to result from that currency. So that's one element of. So this economic reset, what it then does is, suddenly, with the appreciation of the kwacha, our own sugar becomes expensive relative to world sugar prices, and then there's an influx of sugar into our region, now looking for the high domestic prices that we have. So what we've seen is an influx of sugar into the South African market, and as a result, they can't sell their own sugar, which is produced in South Africa and Eswatini because of this influx of sugar. And what does that do to Zambia is sugar produced in the SADC countries can enter Zambia duty-free. So we now have a situation which rarely occurs. And I lived in Eswatini for 20 years, and I was running the company there for almost 10 years. And there was never a time that we ever considered selling sugar to Zambia when I was there. But this time, they've been actively looking to sell sugar here because they can sell it in South Africa. So that's a result of the appreciation of the kwacha. So when the currency appreciates, we kind of just think, it's export realization or something like that. There are wide implications. The other thing that actually happens is that if you think about what protects our market, is the fact that I think the closest port is Beira, 1,050 kilometers from Lusaka. The rest are above 1,900 kilometers. So whoever wants to bring sugar here has to travel that distance. So that acts as some form of geographical protection. But if you think about how do you build your price, you say, the sugar price itself, plus logistics, plus what happens during the ports, road transport to Lusaka, and so on, and you add it all up. But when the world market price is very low, that gap becomes very small. So as a result, sugar it becomes possible to transport sugar all the way here and still be able to sell it. That's the situation that we are in at the moment. So as a result of this appreciation, there's just so many compounding issues that are impacting an industry like ours as a result. There's, I think, enough economists and finance people in the room. You will know import parity pricing. That pricing has dropped to a level where, because it costs X to produce cane and sugar in Zambia, it's independent of what's happening out there in the world. And we pay here for power 13 US cents per kilowatt hour. In Brazil, they pay 4 US cents per kilowatt hour. So you can imagine, they can produce cheaper than us, and so on and what have you. But now they're able to bring their sugar here and be able to outcompete us. That might be part of the reason why we've had more. The domestic demand drop might be reflecting all the sugar that's coming in, which then illegal imports. In situations like that, it becomes attractive for people to bring all these things in. So I've already covered currency appreciation as part of it, and then the drop in world sugar prices as a result. So you can imagine the impact that's had on our economics. And I always want you to remember the fact that we will have grown this cane over 12 months, and that cost is sunk. And then these things started happening to us. As if that was not enough, then the war came, and fuel went up by 35%. I don't have to remind everyone in the room. So all these things are continuing to just happen to us. And as I said earlier, you don't control these things, so you need to focus on the things that you can control. Here we're just showing the impact that I spoke about, that decline in domestic market. Across the whole, you can just see it's minus September, 26%, 32%, 19%. It's minus everywhere, reflecting these things that I've just outlined for you. And then there's a bit of a correlation between these trends and the exchange rate. So if you're thinking about the economics of sugar, exchange rate is a big part of it, not just for exports, but really fundamentally the competitiveness of any sugar industry depends on some balance between what's the right exchange rate for you and so on. But you don't control these things, so you have to continue to do what it is that you can. Here we're just showing you kind of for us to understand our regional dynamics. So you can appreciate all these things that I'm talking about, sugar movement and what it does relative to our location here in Zambia. So you can see we've got many borders. We're a land-linked country. With that also means all these borders are opportunities for things to come into our country when the economics are favorable. So when you see that, you can see our regional neighbors, Zim, Malawi, Tanzania, which are sugar producers. Sugar is really just flowing from Malawi, Tanzania, and I'm sure from Zim as well, Mozambique. Because what happens is traders searching for the dollar just go where it is that they can make it, and Zambia, because of our situation here, is one of those places where you can get dollars easily. So we're in for it, but on the other side, all those countries that you see are also part of the opportunity that we have in the future. So, trying to move. Right. So I spoke earlier about some of the investments that we are doing. So if you think about all these challenges that we have, and say to yourself, what is it that you can actually do? What is it that you can control? The marketing people have an interesting term which is called white spaces. So basically, if you can find white spaces in a market, which is a complex way to just say that, find places that are underserved. I wonder why they don't. Which are very difficult to get to conventionally, and as a result, they are underserved and are white. Whatever else is happening. So that's one of the things that that we're doing. But it also talks to what I said earlier in our mission, that we want to make sure that our product is abundant and available So if we can make it available in all these white spaces, areas that are currently underserved, then we will be in a position to serve the market better, but also at the same time start to build resilience against some of the shocks that we don't have control over. On the far right there, we were launching our mini pack, our 70-gram mini pack. Again, talking to our mission, which is abundance, availability, affordability. So that mini pack is part of the product portfolio that ensures that if someone just has 5 kwacha in their pocket, they are still able to buy something. So these are some of the things that we are doing, very practical, but with wide-reaching impact in terms of building resilience, at the same time contributing to fulfilling our mission. There are a lot of things that you see here that talk to our strategy, operational excellence, but also doing things using simple things. So you can imagine a container is not very expensive, but is good enough and safe enough to provide that product to the market. What else are we doing? Now scaling up. We like big things, so we started small. Now we go to the big things. So this is our Twazabuka project, which I've shared with most of you in the past months. It's a 1.7. We think when we're finished, because engineers, when you unleash them on a project, they keep coming back with scope changes and an addition here and an addition there. So we think that when we are done, this project will be 2 billion. When we got it approved, it was 1.7 billion at the time. It's progressing well. As you can see, the steel structures are up. Again, I've invited you for agritourism. Come, drive around, see, so that when it's complete, you saw it going up. Very strategic and transformational project for us. Again, what this project will enable us to do is that we'll be able to pack 52 weeks because the market needs sugar for 52 weeks. Right now, we're only able to pack when we are producing, which is 34 weeks, and guess what the market requires for the other 18 weeks, which is not very efficient because you've packed the wrong packs. The market needs something different. You are not able to respond. Now we will have a first world-class facility to be able to serve the market flexibly as the market demands. So our marketing people are in the market. They are telling us this is the product that the market wants. That's what we make. Whereas right now they tell us the market needs 1 kg, but we packed 500 grams, and then there's nothing that you can do. So again, if you think about the challenges that I posed, all the things that we don't control, when you have a facility like this, you are then able to at least be able to cope. It's like building a resilience muscle that enables you to be able to deal with all these. We can't wish for a world without these challenges. I think I've been following Mark Carney, the Canadian Prime Minister, who has been saying we have to deal with the world as it is, not as we wish it is. So you can wish for a challenge-free world, but doesn't exist. So what can you do is to make sure that you accept the challenges. But I think more people will get invitations when we commission it in July 2027. So not far from now, we'll have that. Here, what we are seeing are some of the investments again that we are making. So you can see we believe in that we have a bright future, regardless of the challenges. And I think the beauty is the fundamentals that Zambia has to produce sugar. When I speak at national conferences, I spoke in London last year, and I was speaking in April in Nairobi at the Africa Sugar Conference. I always have the privilege of being able to say that if there were only 5 countries producing sugar in the world in the future, Zambia will be one of them. So from that perspective, we have the competitive advantage to be able to do that. But it requires that we position ourselves to take full advantage of this geographic. Make sure that we use this water on a sustainable basis so that future generations will have the opportunity to do the same. So we are playing. $140 million as we speak today, which demonstrates the confidence that we have about the future. We are not people that blow our own horns, so I try. I try to not talk about the fact that we became a $1 billion market capitalization company. I think we deserve a big round of applause.
Oswald, for assuring us that we have a bright future with the level of investment that you've seen. It's really testament to that. And the 4 cents that you shared of other markets is really a dream in terms of power costs. So you can imagine how well we've done with the level of power cost here in Zambia. The main numbers did come out of inflation yesterday, so it's at 6.6. So obviously you can imagine the pressures that we're experiencing as Zambia Sugar, but we are set for that challenge. And obviously to take us through with the numbers in terms of the experiences that we've endured is the Finance Director, Hezron Musonda, to share with us those numbers, and we'll have a conversation after that.
I think Oz has made my job very easy. We all know what we can expect from the numbers, given the headwinds that we had. Yeah, so I think to kick off, if you look at the challenges that we faced, much of them point to the commercial aspect of So if you look at where everything remain water efficient, but also that we remain sustainable, that we're even able to continue to deliver a profit even in drought. So if you add the bedrock, the next bedrock is obviously our production capacity and efficiencies. What are we seeing? Again, obviously, with additional cane being delivered, we saw a 14% increase in terms of sugar production. Is the bedrock shaking? No, it's not. You can see that actually, if you look at the conversion factor of this, last year it was about 8.2, that's cane to sugar ratio. But this is already telling you the efficiencies that we've built. This has significantly dropped to 7.7 in terms of the conversion from cane to sugar. So already this tells you, one, the efficiencies that we've built in the system, but also the fact that the factory is crushing all the cane that we are growing from the agric side. And you almost see that sort of again reflecting when you look at the refined sugar production as well, which went up by 27%. Again, where's that coming from? The fact that obviously one of our key customers are the industrial customers that we supply this refined sugar to, which is necessary obviously for the drinks that you could have had in the morning. And this again to deliver. And template of the refinery capacity that it's built to be able to produce about 90 to 100,000 tons, but now they are challenging themselves to actually beat the manufacturing capacity of the refinery to get to the levels of 120,000. So all these are the interventions that we're making to just make sure that we continue to produce, and this actually speaks directly into our mission, which is for us to be able to produce a safe and high quality food that is abundant, available, as well as affordable to our consumers. So this tells you that the bedrock remains solid. All the indicators are up, 7% up in terms of cane delivery, 14% up in terms of sugar production, and 27% up in terms of refined sugar production. Where did we face the difficulties? Of course, like Oz mentioned, much of the challenges that we had were pointing to a challenge that we had within the commercial space. And that is where we faced a bit of challenge. If you look at, for example, our domestic sales, they dropped by 19%. The key drivers are obviously, he's already mentioned some of them, but think about it in this way. When kwacha appreciates, it has certain implications. One of the implications, just to add on to the other things that the MD mentioned, is the fact that the locally produced goods become less competitive on the export market. And that directly also speaks to the international import parity price. The fact that our locally produced goods become less attractive because they become expensive, even without changing the prices. The prices have remained the same, but just because when you convert in dollar terms, our products now become expensive. Then it means that it's not just the sugar issue. It means also our other local producers that export, then they start scaling back on their production that is earmarked for exports. So if, for example, I produce beverages and I export, because kwacha has significantly appreciated, I'm less motivated. Before, when we were speaking last time in February, which is obviously our half year, the exchange rate, we have bankers in here, it was almost 18.29. It was about 28.89, thereabout. This time around, 18 point something, almost 50%, 47 to 50% appreciation of the kwacha. So for every dollar, I'm now losing almost 10 kwacha. So there's lot less incentive for them to be able to continue to produce at the same level that allows them to export. They have to scale back. That also means that the demand for sugar also drops. In addition to that, you face a situation where there's influx of this dump towards sugar that hits South Africa. It also hits Tanzania. What happens? It has to find a home, which is also what the MD spoke about. Then you start seeing all these illegal imports starting to threaten the domestic market. But also what you see even within our sector is that I think when we spoke last year, I talked about how we left 1 billion on the table that would have actually ended had we exported more. But as part of our deliberate national strategic imperative that we've given ourselves, which is to make sure that we consistently supply the domestic market, even if it means that we lose money that we could have earned from exports, because we want to make sure that our sugar is available to everyone across the country. What you now see the other players is, if I see that the prices are lucrative outside, when the kwacha depreciates, then almost all my production is going outside, which is different from us. But now, when you see it in reverse, what happens? The sugar that was initially going outside now is being channeled within. Then there's also that increase in the domestic competition that you face. Then you start fighting for the shelf life. So that also partly explains what happened also with the drop that we've seen in terms of domestic sales. But again, because we are a responsible corporate citizen, is we do not fear challenges. We face them head on. And that is why even with that increased domestic competition, that did not, and the fact that now how much we are realizing when we export had significantly dropped with the appreciation of the kwacha, we still continue to export. And that is why you see that our export volumes went up by about 24%. The reason, because we still have to be able to support the non-traditional export earnings for the country, because we need the dollars. Otherwise, without the dollars, again, the exchange rate that we're talking about is going to go on the flip side. So apart from that, it's also the fact that we've also got foreign currency denominated obligations that we need to take care of. But all that obviously again tells you we are talking about a period when, one, the world sugar price has plummeted. Then we're also talking about a situation where we've had a lot of influx of the world sugar coming into the region. But for us to be able to increase our export sales by 24% despite our local products becoming more expensive shows you about the quality of our product, that it is globally competitive. Otherwise, what would have happened is our exports would have also naturally dwindled because they've become more expensive. But our customers were still demanding for our product despite the influx of cheap world sugar coming into the region. So I think with the brand that we've built, we do deserve a round of applause for ourselves. Now, obviously, if you look at the weighting that you have, is the fact that much of the weighting is on the domestic sales volume compared to the export sales volume. So that's why, even if we had increased in terms of the export sales volume, you notice that overall in terms of our sales had actually dropped by about 13%, which is almost 23,000 tons. Now, with that 13% drop in overall sales volume, it also meant that our top line, which is our revenue, also dropped. And that is the 10% drop that you're seeing in terms of the revenue that we earned from the volume. So much of that impact is actually coming from the fact that we sold less volumes than the previous half year. And translating that in terms of operating profit, it also naturally then follows that when your top line is hit by that, then you expect also your profitability to be able to drop. And that is why our operating profit dropped by about 52%. And then also when you go further down in terms of our bottom line, our profit after tax, it also again dropped by 65%. But let's delve into a little bit of detail around our revenue line, so that you see a full reflection of the impact when we say that we had a significant hit on our domestic volume sales. So with that drop in our sales, you notice the 19% in terms of domestic. That is the full reflection. How much did we lose compared to last year? We lost about 703 million kwacha, just out of the fact that we couldn't sell the volumes. And from a price point of view, obviously we had a favorable impact of about 307 million. Where is that coming from? You remember that in the previous year we had increased the prices, so this is obviously the full effect of the price revision that we had. But again, you also remember in January we had to take a price reduction. So this is simply showing the net position of the previous price increase and the January price reduction that we had to take. Then when you look at now on the export volume, that 24% increase in terms of export deliveries that we did, that is the 112 additional revenue that we had. But from a pricing point of view, like I mentioned, because the world sugar price had dropped, and also we had also this regional competition, it also meant that even our regional pricing was slightly lower, and that is why on the export price you are seeing a negative movement of 21 million. Molasses, obviously, we continue with our full commercialization agenda of our molasses, and that is the addition of 51 million that you're seeing coming out of our byproduct molasses. But overall now, you see now the full reflection of the FX impact, which is 131 million, purely FX, which has contributed to this significant drop. And that, again, is coming from the fact that we lost out on our realization whenever it is that we made the exports. So that is the long and short of the sales side. I don't know why it's not moving. Okay, so now let's speak about what did that mean in terms of the profit after tax. So we've already spoken about the revenue, the 385 million impact from the revenue. But now let's move on to the cost. And I need to introduce to you something which I know I might be trying to repair a mechanic's car here, or I might be teaching pilots how to fly. So forgive me if you already know the concept, but it's important so that we give proper context. And because sometimes we get questions, obviously, from analysts when people talk about, no, the inflation is dropping, but why are your costs increasing? So with inflation, there's obviously two aspects. What we have been recently experiencing in Zambia is what is called disinflation. Now, disinflation is simply saying that prices are still rising, however, they are rising at a lower pace or at a lower rate. This is what is so if there's an announcement that inflation has dropped from 10% to 8%, that does not mean that prices have dropped. What that means is the fact that the prices are still rising. They were rising at a rate of 10% before. Now they are rising at a lower rate of 8% or 6%. Are still rising, but at a lower rate. And so the expectation that when inflation drops, then all of a sudden everyone is expecting that we're going to have huge savings is actually not technically correct. So I thought we needed to have that. But the other important theory that I wanted us to speak about is what is called nominal rigidity. I know obviously economics try to be fancy with these terms, but this is purely speaking to the price stickiness. So let me give you a practical example. If I'm a trader and the only thing I do is to import things from South Africa, then I resell them here in the domestic market. When kwacha significantly appreciates, like the way it has appreciated by 47%, at the start, when banks were now sending us these daily exchange rates, then all of a sudden we're seeing kwacha significantly appreciate. Everyone did not know for how long this is going to last. So if I'm a trader, the only thing that I do is I import, then I resell. Even if kwacha has significantly appreciated and I've gotten the benefit of the appreciation of the kwacha, what were we seeing with the prices? They were still holding the prices. Why? Because of the stickiness of price. And if you ask them, they are justifiable reason to say, I don't know at the next time that I'm ordering where the kwacha is going to be. So if I reduce the price now, then I have to reorder, then I fail because I reduced. So that is the theory or the phenomenon in economics which is called the nominal rigidity. Why is that important to us? That is important to us because, one, MD already mentioned about the sunk cost of the fact that we grow cash. So this cost is already incurred. But also in addition, what we saw, if you look at the split of our costs, about 25% of them are denominated in foreign currency. 75% is what is in domestic currency. So now, when you look at the dynamics, when there's improvement in the economic indicators, while us, as I'm sure you could have seen the announcement from the Zambia Association of Manufacturers that over 30 of their members reduced their prices, including ourselves. We had to reduce to respond to the economic reset that had happened. But when you look at the providers of the inputs into the production, there was stickiness of pricing that happened. So whereas on this side, we've taken a price reduction, which obviously impacted our last month of this half year, our February sales, is on the input cost side, you still did not have a the benefit coming. While on the 25%, which is foreign currency denominated, obviously automatically because we are importing these items, so we had a saving. But on the domestic side, we did not have a full reflection of that. But also, another understanding is the fact that because of the nature of our business, we also have long-term contracts. And these long-term contracts obviously are legally binding and they've got escalation clauses in them. So you cannot just out of an economic reset or improvement in the economic fundamentals immediately trigger those conversations. Some of them, obviously, yes, we've been looking at it, reviewing to try and make sure that we reflect what is happening in the economy, but obviously some, again, they're obviously legally binding and they automatically come into place. But some of these are strategic partners that are long-term that we need to make sure that we do it. So that's sort of on the core side. That is why you do not see the full reflection. However, it's also important to make a realization that despite that, the only increase in cost is just about 87 million kwacha, which in a normal situation, because like we said, we have sunk costs that we incurred when the kwacha was at 28. So it again shows you a reflection of the cost efficiencies that we've been building to make sure that we don't end up in a situation where when you are in a situation like this, then all of a sudden your costs go out of place. So despite us having this sunk costs, but we've embarked on a campaign for us to make sure that, one, we review our cost structures, we start to manage out the bad costs and continue to nurture the good costs that are productivity driven. So I thought we needed to dwell on that. The other thing that you obviously see is the finance cost. This is for banks. I've seen a number of bankers here. This is obviously related to you, how much. But also, again, when your sales have dropped, your cash operating profit is also dropped. The normal thing that happens is that obviously your cash generation capacity has also gone down. And with that, it again means that as a business, then we have to rely on our working capital facilities that we have with banks. So that is why the finance costs have gone up, because we had to utilize the working capital facilities that we have with banks for us to be able to continue to fund our operations despite the drop in the revenue. And also in terms of the taxation, also the effect that you get is when your profitability goes down, then also how much you have to contribute to the taxman also drops. And so that is why you're seeing that drop in terms of our contribution to the National Treasury. Yeah, so in terms of balance sheet, and I'll just speak to the key items here, which is obviously the MD did mention about the capital programs, the capital program that we have and all those strategic capital investments that we're making. So you can see our PPE there, which is going up, our plant property as well as equipment going up by 2 billion. Then you also see growing cane, obviously dropping with a drop in revenue. Then with low sales, you also expect that we now had to hold a lot of stock in hand. And so that is why you're seeing our inventory levels going up. Why? Because we obviously had low volumes in terms of sales. So those are some of the key drivers. The other one that you see is obviously the borrowings, which was the 700 million concessional loan that we got. Very concessional, to just emphasize, this is very concessional, that it's even cheaper than our overdraft facilities. And you can now see how this actually plays out to the positive. If we had not taken this funding, it would have meant that whole 500 would have actually been relying now on the expensive overdrafts or the working capital facilities that we have. So you can see the benefit of actually taking that strategic initiative that we did for us to make sure that we take advantage of the concessional facility for us to continue to improve our resilience, but also to have a pass-on effect on our value chain. We can move to the next. Yeah, so this is just obviously from a cash flow point of view. Like I mentioned, our profitability dropped, so it also means that our cash operating profit contribution was just about 613 million. Of that, we had obviously to be able to support our working capital by almost a similar value. And in terms of the dividend, also remember that last year we declared a dividend of 347 million. That was now paid out during this half year. And also our continued investment in capital, in the capital program, as well as the funding that we got, which is the 700 million. So to give you a context in terms of what value are we driving to the shareholders, because most of you in here are shareholders or you are representing the shareholders. Again, from a CapEx, we've continued to significantly invest in our capital program, which is investing in your future value. And we actually appreciate the fact that we have seen response from the market. You've bought into our strategy. You believe in the things that we are doing. MD did mention that table alternator number 6 that we're investing. That is going to move us to electricity generation of about 53.5 megawatts. And our demand is roughly about 60. So we'll only be importing from ZESCO just about 7. And now with that 7 that we're going to be importing, we've already gotten on a project for us to invest in a 15 megawatt solar plant. So already you can see that with those projects that we are doing, soon that full cost line that we have of electricity is going to come out. And all of a sudden then we'll be in a match position to actually feed into the grid. And then it speaks now to the vision that the MD mentioned of us being a diversified agribusiness, because now we're going to create an income stream that is going to be coming out of electricity from feeding into the national grid. So again, these are positive sentiments that actually show you that we are being practical and being deliberate about investing for the future. And obviously, the expectation is that you continue to be on a journey with us so that we get to a place where we should actually, MD is always talking about how in Eswatini, by the time that he was leaving, the electricity was starting to significantly compete and even beat the revenue that was coming out of sugar. That is the kind of place that we want to find ourselves in, because then we would have built significant rims that are going to be able to balance the shocks from either side. And so we saw the market respond when we presented our project, our Twazabuka project, as well as our last year results. And that is how our share price went up by about 106, if you compare, and 102%, if you compare with what the share price was at half year last year, from 36 to 73. And really that round of applause is for yourselves, because you are the investors, you are the ones that reflect all the investments that we are doing and all your confidence that you have in us in terms of the future, the future growth. And also, obviously, then it follows with the improvement in the share price, then you also expect that you are going to have improvement in terms of the market capitalization, and that is how we managed to hit the $1 billion US dollar market capitalization. So this is the context in terms of what has happened at half year, and you would then expect that we should be able to speak to you again at full year, where we are going to present the full year results. But all in all, it's just to appreciate you as our shareholders, you as our partners, for being on this journey with us. And you can clearly see that we are being deliberate and intentional about our long-term growth. And the prospects are very bright, and we hope that you continue to express the confidence that you have always done into our company, and we'll continue to see that going forward. And please do come and visit. What you saw, the picture on Twazabuka there, is a real picture of what you come and see on the ground in terms of all these things that are going up. It's a beauty and a marvel to look at. And so please, if you need firm confirmation, because remember what If you are a Christian, you know about the doubting Thomas watch to make sure that he checks. So if you want to take that route, please make sure that you come and see these things that we are talking about for yourselves. Thank you very much.
Thank you very much, Hezron. Another round of applause to Hezron for that very wonderful presentation. Thank you very much, Hezron. Thank you very much, Oswald. Obviously, the two presentations have been very, very clear. However, there are still some people who may have questions, some clarifications. Maybe to start off, you've got mics by your table, or there's mics going around. I see colleagues who help with passing on the mics. So do raise your hand and give us your name and then the institution that you're coming from, and then do share your questions or clarification. Obviously, my clarification or request for clarification goes to Hezron as we start off this process. You did mention that we reduced prices in January, February. Did we, obviously responding to the fundamentals in the market, did we front load that benefit? Because you said today overall the price increase has been 87, cost increase has been 87 million, somewhere there. So if you could maybe just provide a clarification as you get to some of the questions that are being asked. Okay, shall we have some people asking questions? Are there any questions that you'd like to ask? You raise your hand. I see a hand there.
Thank you very much. Good evening, ladies and gentlemen. My name is Okechukwu. I represent Standard Chartered. I work in market sales. Thank you very much for the very clear presentation. And I think the context is well taken and well done to the team. I just wanted to find out, so historically, in an import-driven economy such as ours, most of the focus in terms of FX hedging has been on the part of trying to hedge depreciation of the local currency. I think hedging appreciation of the local currency isn't something that is very common in this market. So just to have a sense, what is the team looking at in terms of potentially hedging further appreciation of the local currency so that you have, a holistic hedging policy to obviously protect the business? Thank you.
Thank you, Okechukwu. Any other questions?
Yeah, my name is Donald. I'm the managing director for Zambian Business Times. Thanks to Oz and Hezron for the presentation. I think they've been very deep. I wanted to ask a question concerning the fortification. I noticed also in terms of the impact on the local sales. So can you comment on how the fortification for vitamin A is being utilized to your advantage, especially in times like this when there are cheaper imports that are looming? Secondly, also I saw brown sugar. Of all the categories, I think brown sugar is the only one that showed a dip. Maybe you can shed some more light on why brown sugar is the one that seems to be the most affected. Thank you.
Thank you very much, Donald. Are there any more questions? We've got a hand here.
Good morning. My name is Mtekamdenda from APSA. Given where the pricing has dropped and the revenues, how would that impact your earnings per share? And how do you see that tracking against the market capitalization that has just got into $1 billion? Thank you.
Thank you, Mteka. Thank you. Any questions? Or shall we maybe respond to this set of questions and then we'll take another round of questions?
So I'm going to take the hedging. So of course we have thought about alternative instruments that we can use for us to be able to hedge that. And among them are things like the inventory factoring and stuff that we have. But you see, when you trade or you produce a sensitive product, which is a basic food commodity, you've got to be very careful with some of the instruments that you take on. Because what you want to avoid is a situation where when you do certain instruments, then when you, the analyst, look at it, then you start thinking that the reason why, for example, if we have to review our price, we're reviewing it because of a position that would have taken in terms of the hedging. So, for example, if you think about inventory factoring and all that, what this means is that we're sort of trying to front load the sale, and then all of a sudden you're going to see sugar on the balance sheet for a bank, and then you come back to us and say it's because you guys have gotten into this kind of thing with the bank, and that is why now maybe it's the bank that is pushing you to push the prices. So you need to be very careful with the instruments that you take. But again, it's also a realization that there is a fine balance that you have to do. The fact that our export sales, and if you look at the results that we showed, despite all these things that happened, our export sales still remain strong. So that actually tells us that we still have the USD earning capacity or capability. That has not been compromised. And if we are going to have that natural hedge, we already have actually a natural hedge that is coming out of our exports. And if we feel that it still remains strong enough to be able to support the 25% over our costs, then we have a natural hedge, in which case we might not think about all these the non-vanilla or the exotic kind of financial instruments that we may have to take for us to just hedge. So yes, we've obviously been discussing with some of you, the banks who are in here, in terms of what alternatives we have. But I think so far from the things that we have discussed, I think we have decided to be very careful with what kind of instruments that we are going to get into. But for now, I think there's no reason for concern, because our exports still remain strong, which provide us with a natural hedge. I think the MD is going to address the fortification, and then chamber the brown sugar.
Yeah, so, am I on? You can hear me? I think vitamin A fortification talks to our mission, to make sure that we are providing a safe and high quality food which is healthy for our people. But what tends to happen is that during times like this, when there is an influx of sugar that's coming from other countries, people don't pay particular attention to the fact that some of the sugar that's coming into the country is not fortified, which is quite unfortunate. So what actually happens is they end up consuming sugar that's not very healthy, and there's nothing that we can do about it, because as I mentioned during my presentation, most of these imports are actually illegal, so they are not subject to the scrutiny of the authorities. But also, if I may add that the sugar that comes from Malawi, for example, is coming from our sister company, which is Ilobo Sugar Malawi, and they also fortify with vitamin A. So to the degree that we are competing against that sugar, it's as a lot of the customers tell us, you are competing with yourself. So I think from the health perspective, then there is no risk to the market. So that's what happens is people sometimes unscrupulous importers import sugar that's not fortified, and then the health benefit is lost, and particularly for young for young consumers. Thanks. Chamber will take the question on brown sugar.
But I think you can hear me. Okay, that's fine. So you see the challenge of being in commercial is that you don't carry around a special mic. Get to use an ordinary one. Yeah. So before I answer the question, so maybe let me just amplify the comment that both the CEO and the FD mentioned about the future being bright. So based on our insights, when you look at our sugar consumption per capita, what you see is that we are still quite low in the region. Currently, our sugar consumption per capita is estimated at around 14 kgs per person. If you compare in the region, you find that, say, South Africa, you are talking of about 40 kgs. So there's a huge potential for growth in Zambia, actually. And if you look at the consumer pyramid itself, especially at the bottom of the pyramid, what you see is that consumption is quite low, about 1 kg per capita, 1 kg in the full 12 months. So you can see that there's still a lot of room for growth. Coming to the question on brown. So ordinarily, our brown, in particular the 1 kg brown pack, is the one which is a preferred pack actually for the rural markets. And if you look at the population, you'll find that the rural markets actually constitute the bigger population, proportion of our population. And in particular, look at Eastern Province, Muchinga, and Southern and Western Province. These are markets that take up a lot of brown in 1 kgs. But these are markets also which are really impacted by the influx of imported sugar, which both the CEO and the FD actually spoke about. So if you go into Eastern Province currently, you will find trucks from Malawi offloading sugar openly. It's not a hidden secret. Sugar is all over the markets. If you go to Muchinga, in fact, Muchinga has become worse now. In the past, it used to be sugar from Malawi alone. But now what we see is sugar also coming in from Tanzania. I don't know if you've ever heard of TPC, Bagamoyo, Muhammad Enterprises. If you remember also, CEO spoke about sugar finding its way from within the region. But for us, it's Tanzania. Last year, traders were given permits to actually import sugar into Tanzania. But that sugar now is finding its way into Zambia. So you'll find quite a bit of brands from Tanzania in Muchinga. And that's why you see that dip on brown. But then in addition, FD spoke about our competitors. So all our competitors actually export between 30 to 50% of their production into the region. But what happens when the kwacha appreciates? They prefer to sell in the domestic market. And brown industrial is primarily used for production of biscuits. And the price differential between what our competitors are offering is huge. And so the smaller players, smaller industrial players have opted to switch, and they are using our competitor products for production of their biscuits. So I think those two are the major impacts on our brown sales, and that's why there's that dip. Thank you, Donald.
There was a question on the impact of the drop in revenue and earnings per share, as well as also the market capitalization. So with obviously earnings per share, this is a factor of your net income and the number of shares. So the natural expectation is that when your net income drops, as in this case, you also expect that your earnings per share is going to drop. And obviously with market capitalization, again, it is a factor of your share price and your number of shares. And we believe that we should not be able to see any impact on market capitalization. Aren't we all proud by the fact that we've got Zambian businesses that are above $1 billion US dollar market capitalization? I think it's something that we need to preserve. So the responsibility is actually between yourselves as investors into the business and ourselves to be able to show the long-term value. Because if we take, obviously, investment in shares is not a short-term kind of investment avenue that you want to take. If you invest in shares, you're investing, obviously, for the long term. And so the question is the long-term view of the business questionable in any way? It's not. The fundamentals are there to show that, indeed, we can expect better times. And so our expectation is that instead of the opposite, that this is a time that people are going to show their confidence in all the investments that we have done to build a sustainable and resilient business. So I'll actually throw back the question to you to say, are you going to show us that indeed we can retain the value that we have in the long term of this business?
Thank you very much, Oswald. Thank you, Hezron. Thank you, Chembe. We'll have another round of questions. If you could raise your hand, the mic will come to you. Give us your name, the institution that you're representing.
Hi, good morning, everyone. My name is Justin Perry from Zambian Business Times. So we've seen there is an increase when it comes to crude oil prices on the international market, which has then led to an increase in domestic fuel prices. So I understand that fuel has an impact in almost all sectors of our economy as Zambia, and particularly for Zambia Sugar, which is into production. I understand for some of the exports that you do, it also has a transportation cost, and with an increase in fuel prices, that has an impact on the revenue and the profit that you make. So I just wanted to get your comment on how that has impacted you, and with the likelihood of fuel prices or international oil prices continuing to increase, what sort of plan do you have to strike a balance? Are we going to see a situation where the price, the cost is passed on to the consumer or not? Thank you.
Thank you, Justin. Oswald did touch on that, but we'll still come back to it. Thank you. Any more questions? I see. Are there any more questions? Do we have any questions online? Nothing. So maybe going once, going twice. Okay, so maybe we could respond to Justin's question.
Yeah, so Justin, you're right. Of course, MD did mention when he was talking about the VUCA world, the fact that all of us woke up, then the next thing we're reading in the news is that there's a war in Iran. And that generally also affected the fuel prices. We've had to obviously be able to take that. It's outside our control. And so, but you see, there's the other positive aspect to this is if you check the source of the cheap sugar that we've been talking about, the source is actually Brazil. Now, why is this important? This is important because there's actually some relationship between the world sugar price and the fuel prices. So when the fuel prices trend upwards, what normally tends to happen is that the Brazilian factories then start to switch from sugar production to ethanol production that they use for their fuel blending and stuff. So then that starts to force the world sugar price to go up because they've switched production. So while, yes, we've taken the knock on this, but it also actually gives us a better outlook because we know that then the world sugar price drop that we've been talking about has already started to reverse because of what has happened with the oil prices. And so with that, the expectation is that we should also be able to see a recovery in our export prices. And with that recovery also, it actually means that our realization also becomes better. So yes, as much as we've had to stomach the impact of the fuel prices, is also that it also actually changes the fundamentals in terms of us giving us a positive outlook in terms of what we're going to earn from our export. So that's the balance. And that's how you have to sort of be broad-minded when you're in a business like ours because certain factors that happen have got multiple implications. Thank you.
Thank you very much, Hezron. I would like to go around the room to take the last set of questions, if there are any. Do we have any more questions? I see none. So I think on that note, would like to thank you most sincerely for having come to share with us at this half-year results presentation for 2026. Thank you very much for the people in the room. To the people online, thank you very much for having spent time with us this morning to share these results. I think I'd like to invite Oswald to just come and give us his farewell. And then I would encourage you to spend a few minutes before leaving to just interact with the members of the team to find out a little more that you may want to find out. Thank you very much. And thank you to the people online.
Yeah, so I did open by thanking you all for coming and spending this morning with us. And so I'll reiterate my thanks again, that we appreciate you as our partners, investors, the press, the bankers that we work with. As you can see, food production isn't something for today only. Food production is something for all generations, something for the future. And this company really is well positioned to take full advantage of the growth in the African population, the growth in our own economy. So really the future is bright. And I often speak about sugarcane being a miracle crop. And when you think about it, there are not many crops that allow you to make food first and then your downstream benefits downstream. So what we can look forward to in the future is that as more and more pressure is placed on the sugar itself, we can then build downstream products. We can start producing pure ethanol as well, like Brazilians do. We can produce electricity. We can produce biodegradable plastics. We can use fiber to produce other products like Fefro and others. And all these things are things that we can still do in the future. So even this question on price to earnings ratio, it's really not about what has happened in 12 months. You invest in a share for the long term. That's why it's an equity investment. If you want a return for 12 months, you put money in your bank, and then you know exactly what you're going to get. As a fundamental investment, this is a very strong business. That's why we're investing over $120 million as we speak, and we've got bigger plans to continue to invest. It's because the fundamentals of the business are sound. And we've got a huge market in the African continent. As I said, Zambia is one of 7 countries out of 55. So you can imagine the number of countries, that 48 countries that do not produce their own sugar, that can become our markets in the future. And I think as Zambians, we can be very proud of our sugar industry because it's world competitive. As I said, it's in the top 5 in the world. So I think we can all be very proud of the future that we can look forward to, and there will be more and more diversification as we face challenges. As you have seen, we are a management team that doesn't shy away from challenges. So we'll keep taking you on our journey, and the Zambia Sugar journey is an exciting one. So we thank you and hope you have a great day forward. Thank you.